Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek, insight from the reporters and editors that bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Businessweek. Donald Trump's move to impose tariffs on major U.S. trading partners sparking a sell-off in crypto. The index of smaller tokens at one point today was on track for the steepest two-day rout in almost 3 years. Sometimes hard to follow this stuff given that they trade 24/7, Carol.
Exactly. Especially when the headlines today were kind of all over the place.
Did you see what happened with Ether, though?
No, tell me what.
Okay. The second biggest crypto, it briefly plunged as much as 27% before pairing losses. If I go to CRYP Go on the Bloomberg terminal, I can see what it's doing right now. Down about 7%.
I got to say, we follow crypto a lot. You do a show on Bloomberg Television that's all about the crypto market. I mean, they move around a lot, but the moves that we saw today, pretty wild, even by crypto standards.
Chen Arad is the co-founder and chief experience officer of Solidus Labs. It calls itself the, quote, first crypto-native security and compliance hub tailored for digital assets. The company says it monitors more than 8 trillion events each day to help make crypto safer. Welcome back to Business Week. Good to see you.
It's a pleasure. Thanks for having me. I thought I taled too much last time.
No, you did okay.
You're welcome back anytime. I do want to talk about the price action, though, a little bit, because even in the standards of crypto at 27%, can I call it a flash crash? Like, what was that?
Well, a dramatic response to dramatic events, I'd say, in an asset class that I think is really important to reminder.
Okay, but hold on. We knew tariffs would happen.
Right.
The president talked about that a lot on the campaign trail. So was it really dramatic?
Right. Well, I think sometimes something happens, but when it's something so unprecedented that the impact can still be more dramatic. I think it's an important reminder that as much as digital assets, Bitcoin, Ethereum, and the rest have matured, they're still nascent assets that can move very, very fast. You know, I'm a guy who's been in this industry for 7 years, so I've seen them drop more and rise less in shorter periods of time. So,
are you concerned with the rising correlation of this asset class with tech stocks, especially Bitcoin?
So I wouldn't say I'm concerned. I think that in a lot of ways, it demonstrates the maturity and the adoption, right? I mean, I think, and we'll talk a lot about regulation today. We're seeing a broad motion where digital assets are becoming a more integral part of other financial markets. So I think there's a lot of positives to it. And again, I think that you've seen cases where they correlated. You've seen cases where they didn't. There are a lot of explanations in each case, but I think they're still young assets, and it's really hard to predict.
Yeah, I think there was one point that we thought it was going to be like a safe haven, perhaps. Didn't kind of work out that way today. So, I mean, Tim and I talk about this a lot. Like, I still try to understand what we should think about. What is crypto?
Right. Well, I think a safe haven is
or cryptocurrencies.
A safe haven is a dangerous term, I think, when it comes to capital markets, because nothing is 100% safe. No. I think oftentimes, obviously Bitcoin is perceived as a hedge specifically for inflation. So the safe haven element, I think, is true there. Because regardless of whether the price is going up or down, it cannot be inflated by a government. But ultimately, again, as Wall Street has dramatically increased its involvement and is constantly becoming more involved in digital assets, I think it's natural to also assume that there will be some cases where there's more correlation.
Well, if governments get more involved, we have now a president in the White House who certainly seems much more interested in it in an upbeat way. So does that also then make it maybe more susceptible to the factors that affect traditional, if you will, or our traditional boring assets that are out there?
Well, I'd say that when you look at Washington these days, and I visited twice in the past 2 weeks, met with more than 20 elected officials and their teams, there's a broad motion to figure out the right way to regulate crypto and essentially, bring it closer to the family of other financial assets. So yes, I'd say it's 100% part of the same momentum. I don't think it means that it will behave exactly like other asset classes in the long run.
So wait, should we have in our investment pie? So how is it? You've got stocks, you've got bonds, you've got cash, is it alternative assets where crypto falls into and it's a little sliver?
Well, I think that's the case for a lot of portfolios today.
But how are governments thinking about it?
Well, I think...
How's our government after the meetings you've had?
So I think the governments generally see it, first and foremost, as an innovative power that can push, the financial industry forward. So, I think a lot of the support for the assets are just because they're innovative and they're pushing on infrastructure and efficiencies and a lot of things that haven't been changed in finance for a very long time. In terms of... I think that will ultimately lead to digital assets, crypto just being considered another asset class that again has its nuances, but is an integral part of most portfolios, depending on your risk appetites, etc.
Were you down in Washington, D.C. for the inauguration? Any of the parties associated with it?
Yes, I wasn't at the inauguration, but I've been with a lot of the parties and conversations that ensued. Yes.
So I wonder what people talked about in relation to the Trump and Melania coins, because there was so much news just ahead of the inauguration when these two, we call them meme coins here at Bloomberg, when they came out. And there was also some reporting that I read about people within the crypto community not necessarily viewing it as a positive development within the industry. How do you view it?
I think that there's a lot of ambivalence. There are views on both sides.
How do you view it?
So I personally have not invested in the coin. I'm generally not particularly interested in meme coins. I think that the people who would defend it say that ultimately it's like a baseball card. Some people want to collect it now that Trump was inaugurated. There are a lot in the industry, and I think there's some truth to it who also sees it as something that devalues or diminishes a little bit the credibility of the industry. And a lot of people don't appreciate it.
To be in the position of somebody listening or watching this right now, they might say, yes, but with a baseball card, I can hold it.
Right.
With this, what am I actually buying when I buy the official Trump meme coin?
Well, you're buying an immutable proof that you're holding a digital asset. So in a lot of ways, it's harder to make disappear than a baseball card. I can't imagine how many baseball cards, well, in my case, soccer cards I have in places where I'll never find them again. So there are also advantages to it. Again, the whole world is becoming more digital. And I think there are a lot of people for whom that's not really a consideration, but for people for whom it is a consideration, don't buy it. I do think it is important to say, just to echo your point, that there are people, and many have been vocal about the fact that it's not necessarily appreciated because we take our industry very seriously. That being said, the meme token world is a huge part of the industry, and a lot of people really enjoy it. It's one where you have to take into consideration that those assets don't necessarily have the same kind of fundamentals you'd see with other assets, and you got to be careful and do your research, as there are a lot of scams out there as well.
Yeah, I think the Bloomberg wrote about that, right? The concern, the criticism was that it wasn't taking it seriously, in terms of the digital space. Hey, one thing I want to ask you, Ken, is that the president signed a measure to create a sovereign wealth fund. Would it be a dangerous measure to include cryptocurrencies in a sovereign wealth fund here in the United States if our government creates one?
Every asset has its dangers. Also in the executive order listed, that he signed last week, specifically on creating a crypto task force and working group, that includes also a scope of considering a Bitcoin reserve. So there are risks. So there are also obviously a lot of opportunities. But I think that at this point you have endowment funds, you have pension funds that think it's important enough to include digital assets in their portfolio. I think it's just natural that the U.S. government might consider that as well. Again, it's an asset that has a lot of value. But it's the taxpayer,
right, ultimately is on the line or feels the losses, correct?
Right. Yes, of course.
In a sovereign wealth fund.
Yes.
Or the citizens of.
Well, I mean, yes, but they'll also feel the profits, right? Which is part of the idea of a sovereign wealth fund. I think that thinking long term to not at least consider digital assets as part of a sovereign wealth fund would be silly because they're the most successful assets in terms of growth over the past decade, I believe. But that doesn't mean that they should be invested in blindly, not by anyone, and definitely not by the government. So it should be done with care.
By the way, the official Trump, according to Coin Market Cap, has a market cap right now of $3.7 billion, down from close to $15 billion. Chen, thank you so much for joining us. Chen Arad, co-founder and chief experience officer of Solidus Labs. Up next, Edelman CEO Richard Edelman. It's just been a few weeks. Exactly 2 weeks, Carol.
Yeah, busy 2 weeks.
Since Donald Trump was inaugurated, a lot has happened. Here's just a few things. A slew of executive orders. What is looking like it's turning into a trade war. Elon Musk making some big changes as part of his work on what he calls government efficiency. Some very tense confirmation hearings and upheaval in the world of AI. And more. And again, It's only been 2 weeks.
Yep, only early February. All right, so we wanted to know what CEOs are thinking, and that's why we have Richard Edelman with us. He's got a great big macro view on all that is happening and what it means for the C-suites around the globe. Richard, is Chief Executive Officer of the global communications firm Edelman, and he joins us here in studio. He's just back from Davos. Let's start there, because what a great starting point. And I've been talking to, and Tim and I have been with folks that were in Davos, and it seemed like everybody wanted to talk about President Trump or artificial intelligence, but tell us your perspective.
So I think the American CEOs were quite bullish. They felt, deregulation, lower taxes, a chance to, increase investment. Meanwhile, the European CEOs felt deeply depressed, and they were nervous about trade. They were nervous about regulation. I heard one CEO tell me he has 35,000 data points to give to the EU on environmental regulation every year. And that's a huge burden. So also, I would say it was a very business-like Davos. Other than Trump's last day appearance and Milei of Argentina, there were very few government leaders. So it was a much more business-like Davos.
It's interesting that you say that. You're probably the second person to tell us in just a few days that the mood of European CEOs was pretty gloomy.
Well, they're gloomy because I think they feel trapped between the U.S. and China. They have big sales in China, cars, et cetera.
Right.
Their energy costs are high. Their regulation is high. And frankly, they're nervous about the German economy, the French economy, both of them wobbling along. So they don't have domestic demand like the U.S. does.
So it's interesting as, we navigate from day to day, hour to hour, the headlines that come out of the White House and the Oval Office. And so I am curious, was there a perspective among the global CEOs, or more importantly, the American CEOs, that it's kind of a wait and see, that we think some of it is a lot of talk, and that ultimately, as you said, policies will make business sense and they might not be as extreme as some of the conversations around them are?
I think.
Or you can tell me I'm wrong.
No. Look, I think our Trust Barometer came out in time for Davos, and the thing that was so noteworthy, Carol, is that we see the world slipping into grievance, and that 60% of the world's moderate or high grievance, and especially in Germany, 35% of people highly aggrieved just before their elections.
Yeah.
And why is that? Well, it's inflation. It's the sense that my family won't be better off in the next generation. Lack of hope. Fear of job loss to AI. And so I think business has every way to solve this. Give me a good job, reskill me, have affordable products. That's the playbook. And CEOs need to make sure that it's about their business.
Why do you think we see this happening around the world? It's not this idea of grievance is not particular to one single country or one single region. Well, is this a post-COVID phenomenon? Is it a rise of the cost of living phenomenon? Is it a globalization phenomenon? Is it all of the above? What is it?
It's like dominoes. And so, you start with the mass class divide, and you have a battle for truth, and you have this problem of COVID 5 years on, where people, mental health and other things, and then you have all the geopolitical issues. And so all of this is a lot, and people feel continuously punched. And so I think they used to take it and just have fears, and then now they're aggrieved, and they're prepared to fight back. And whether it's misinformation or even violence, this is what we start to see. And business has every reason to be concerned about this, because business is distrusted by the highly aggrieved. It's different than most, because business is the most competent, most ethical, except for the highly aggrieved. So business has to try to pull people back from this cliff and make people feel as if they have good jobs, they can get well paid, they will be reskilled and can compete.
So what's the problem? Is it that workers aren't sharing in the profits? I mean, we're in earnings season. We see it. I mean, companies are doing well. And is it a case that they're not sharing all of those with their workers?
Well, here's an example. In Japan, there hasn't been really a raise for workers for 30 years.
Okay.
And so you get the idea of why people in the lowest quartile of income feel deeply aggravated relative to the higher income.
So why aren't CEOs appreciating those workers at that level?
I think that they are, in the sense that they use them, they put them in jobs. But the truth is, there's been outsourcing, there's been globalization, there's now AI. All of this is towards cost and effectiveness. And so CEOs are balancing a lot of these factors, but they do want employees to work hard and be satisfied. And the key to that is pay.
We saw CEOs 2 weeks ago stand behind the president at the inauguration. Some, exactly. Not all. We saw many prominent ones there. In general, we have seen some CEOs share their views politically more so in recent weeks and recent months than we're sort of accustomed to. You said there's this idea that they're cheering deregulation, they're cheering lower taxes. But what about the chaos that's associated with the administration thus far? Is it a distraction to them? Is it what you get with Donald Trump because we knew that in the first term? Or is it something that concerns them because they need to make decisions about their businesses in China, in Canada, in Mexico?
I think CEOs need to argue for agenda items that suit their business. So, for example, if trade is a key part of your business, you should go out and advocate for free trade and say, this is going to cause inflation, or it's going to make my supply chain inefficient, or it's actually going to cost jobs in America. But also, the non-American companies need to make the case for investing in the U.S., putting more manufacturing here, making sure that it's aligned to the president's agenda. It's both. But I don't believe that CEOs should stick their heads up and be very political. I think they should do their businesses.
But, I want to go back to what you said. 61% globally have a moderate or high sense of grievance, which is defined by a belief that government and business make their lives harder and serve narrow interests, and wealthy people benefit unfairly from the system. I'm waiting for the deluge of emails of we got that, Carol. That explains politics that are going on. But Richard, is it just a case of paying workers more? I'm not saying just. I don't mean that. But I mean, is that the fix? Because there are a lot of disillusioned individuals here in the United States and around the globe who just feel completely left behind.
So inflation is corrosive. Got to get inflation under control so that people feel as if when they run hard, they're not running into the wind. Second, they got to feel as if they have a chance for the future. Reskilling, upskilling, core. And then third is pay and continuous ability to get to a better place.
That seems like such an easy fix. Mm-hmm. Why then aren't we getting there? Paying workers more. We've had guests on, right, talking about a living wage and then some. Why isn't it being done?
Because we're not taking full advantage of what's possible. AI is actually an enhancement tool for workers to be able to produce more. I mean, in my business, I can see how much faster people turn out press releases and message points and things like this. Everyone's got to put AI into their workflows. Also, we've got to be sure this reskilling thing so that everyone feels as if he or she can compete, not just the 22-year-old who's just out of school.
Because I feel like we've talked reskilling for years.
Yeah, it's true, but we've never done it. We've never done it in an effective way. And also, business can't do this alone. Business should do this with government and NGOs. And the secret here is NGOs, non-governmental organizations, they're local. They're also actually believable for the high grievance people. Business is not. So business should partner with community organizations.
We were supposed to see reskilling after NAFTA. And obviously that didn't happen to the extent that many people thought it would or were told that it would. And we can see what's happened today as a result of some of the problems in certain economies around the country. How do these workers use AI if they're not in part of the knowledge economy, or if they're not writing press releases, if they're not writing message points? What is the way that for people to embrace AI rather than be scared of it?
So one of our clients, Honeywell, is using AI on the factory floor and making their workers more productive. That's the key to the future. And actually, blue-collar workers have much less job risk than white-collar in insurance and other things where they're repetitive skills. So blue-collar workers could thrive. This is a very important message that most people haven't absorbed. And we need to keep telling this. And we also need optimism back in this country. We need to make sure that people believe again that the country can do better. Because in the moment, there's this inundation of negativity. And I think competence and ethics will get you so far. But if you want to run an 8-minute mile, it's aspirational for me these days. But I have to believe that I can.
Yeah, I think it's fascinating that we also at the same time have been talking about American exceptionalism, like in comparison to what's going on in Europe and so on and so forth. But there's so many people in our society that don't feel that. You know, when we talk about stock market, well, not everybody's in the market.
Only half the people are in the market.
Correct. And I look in my world, people I talk to, a younger generation, are like, I'm not going to have kids. How am I going to afford kids? I can't even buy a house. Like, it's just crazy.
But again, the chance to get to optimism is based on specific actions. And if there's a national reskilling campaign, or even by cities, I think this is interesting, Carol. The trust has gone local. Trust in my mayor, my company, my CEO is much higher than anybody else. So this is a channel that companies should use.
Great to check in with you. But go.
We've been speaking to you for years. In terms of the 25th year of the Trust Barometer, things better or worse? What's the trend?
I think we're at a precipice. I think we are at a place now where we've got to reverse this trend of grievance, because when people are aggressive, they actually reject innovation and they're scared and they fight any change. And we have to get them to a place where they accept change.
Richard, thank you, as always. He is the CEO of Edelman, Richard Edelman, joining us right here in our studio. I'm Carol Massar along with Tim Stenovec. This is Bloomberg Businessweek.